Let's talk Bitcoin.
It's going to be close to
9,000. Still thriving in China.
Is a digital gold climbing through 20,000 and even to 50,000 by the end of the year.
The same way that I said in 2013, put 1% of your net worth into Bitcoin, I will put myself out there today. I think this thing is $100,000 a coin, probably in the next 3 to 4 years. And I think it is, in the next 20 years, $1 million a coin. What I'm saying is, you could buy the S&P 500 index, buy 99% of that. So if you have $100 to invest, what I'm saying is...
Put $1.
Put $1. And the reason that $1 is so valuable is that it is fundamentally not correlated to the other 99. And just on the off chance that all the people that manage the 99 may not totally know what they're doing, the $1 may actually save us all. So in 2018 or 19, heaven forbid we go through another cataclysmic financial event, we are going to see the same fundamental correlation. And so again, I ask, why would it not make sense to have a non-correlated hedge? For a small amount of this is about buying insurance. It was the same.
Bitcoin still works great today. It's a great store of value. I think it works really well in terms of digital transactions, and I think it's a great example of security. I mean, in 10 years, not a single person has entered a fraudulent entry on the blockchain. That's trillions of dollars of on-chain transactions. None of them have proven to be fraudulent. I think the reason Bitcoin looks really good here is the cost of mining is around 7,000 fully loaded, and the difficulty is rising. So by the end of the year, it's going to be close to 9,000. Bitcoin's historically traded at 2.5 times its mining cost. So it's not out of the question that it could be over 20,000 by the end of the year.
Here's what I find interesting about Ethereum versus Bitcoin. Bitcoin in orange, Ethereum in the blue. Here's your lows that you've had before. Now, what's interesting is Bitcoin is right on the lows, in fact, breached it a bit, but Ethereum did not. So relative value-wise, Ethereum has been trading a little bit better than Bitcoin. So if I were going to be long this market, and as I am, I would overweight Ethereum at this point in time.
We haven't even got to the start line of cryptocurrencies. The technology isn't ready to go mainstream yet. It's very hard to open an account. It's unscalable. So yes, there is a new digital gold, a new digital store of value. I think Bitcoin is the store of value, but the game hasn't even started yet. My view is that Bitcoin is a digital gold, and that very soon in a couple of years, there'll be more demand for Bitcoin than there'll be for physical gold. Now, we know how the algorithm works in terms of mining, and we can have these discussions as to whether it's better or worse than gold, but we're still creating that demand. If you understand the technology and you're a bull, then now is a great time to be buying. We know that there were 27,000 blockchain startups in 2017. In the first 6 months of 2018, there are 28,000 blockchain startups. There's a huge venture capital scene, and the blockchain is progressing, and this thing isn't going away.
So the volatility has actually dropped as the price has dropped, which is actually a problem, because if you're investing in Bitcoin, it's essentially a call option. You want as much volatility as possible to have as much chance that Bitcoin goes to 50,000, 100,000, 1 million, whatever that high number is. So as volatility drops and the price drops, it actually is a bad thing for the market, especially since it's only about a 200 billion market cap asset, which is de minimis in the grand scheme of things. 2013 to 2015, we went from 1,200 to 200, from 2015 to 2017, 200 to 20,000. So we've done these sort of moves before. I think the time span is going to shorten because you have many more people involved in the market and who have invested capital and resources to be able to trade this asset class. And so now that we have more visibility, more people talking about it, the time between an aggressive bear market and an aggressive bull market, I think, is going to shorten. But we're one positive regulatory decision away, maybe an ETF, approved by the SEC, to climbing through 20,000 and even to 50,000 by the end of the year.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.